Hello and welcome everybody in the audience. Today we have another great panel for you, namely navigating the intersection of the Euro digital identity wallet and the digital euro. Panels like this could not exist without the support from our standard members. And today with me discussing the latest developments in the digital identity wallet that is being discussed even in the form of a regulation that's upcoming right now in the Eurozone, is Johannes Sedelmeier, Cyrus de la Rubia, Andreas Wand, and Matthew Niemerk. So welcome and thank you for joining today's panel. I'm sure it will be a really exciting one. I think we're going to dive deep into aspects such as privacy, preserving mechanisms and technologies, but also other aspects that are either in parallel with the digital euro or completely different. But I would like to hand it over to our panelists to introduce themselves first. And Andreas, why don't you start with giving us an overview of what you're doing currently?
Yeah, my name is Andreas Wand. I'm Business Development Manager at dTrust. dTrust is the affiliate qualified trust service provider of Bundesdruckerei Group. And we are a lot of connection with the eIDAS regulation, which govern the qualified trust service, but also the eID, and in future the EUID wallet, which will be a big part for today. But we are also, as Bundesdruckerei Group, we are also involved in the work with the digital euro, that's from my side.
So perhaps I continue. My name is Cyrus de la Rubia. I'm chief economist of the Hamburg Commercial Bank. I'm working with this bank since 2005. And as an economist, I follow very much what is happening with our monetary system. And this includes, obviously, the payment system, as this has potential implications for the efficiency of our economy, our competitiveness in comparison to the US and the Asian countries. And at the end of the day, on our growth prospects. Apart from that, it is clear that digital euro is of high relevance for the banking sector, as the digital euro is a new payment system, and this means that banks are affected directly in their business. We will perhaps discuss the issue if a digital euro is more a new new competitor to banks, or if it is more a kind of framework which gives room for banks to innovate on this platform. And with respect to the digital identity wallet, which is the other big issue today, this is, of course, also of relevance for banks, which is my perspective, as all banks have to be very careful with respect to money laundering and other illegal transactions. And this means that know your customer procedures are necessary, and thus technology which enables to facilitate those processes. And so these processes are obviously more than welcome and could save the banks a lot of money. Well, finally, my bank is based in Hamburg, doing business in Germany and some selected European countries. Our main business fields are real estate, shipping, infrastructure, including renewables and corporates.
So my name is Matthew Niemerk. I am the president of the Aleph Zero Foundation. We are primarily involved in building out a layer one blockchain protocol with a special sort of whatever you want to call it, a target on privacy enhancing applications. So this would be doing all the research behind the zero knowledge proofs, multi-party computation for confidential computing, and then building out and supporting applications that actually go ahead and utilize this advanced cryptography for the betterment of the entire crypto ecosystem, whether or not that is in supporting zero knowledge decentralized identity solutions or private payments or private transactions using zero knowledge proofs. I mean, all of this is really capable whenever it comes to the math and the technology, but we're doing this in a way to really focus on compliance and adherence to regulations. And obviously, this is a balancing act where you want to have the citizens to have privacy and freedom and the ability to transact freely with one another, while at the same time adhering to the existing regulations, and also being able to mitigate the any issues whenever it comes to money laundering or terrorist financing.
Right, and then I will finish this round. So hi, I'm Johannes. I'm currently a postdoc at the University of Luxembourg. I did my PhD before at the University of Bayreuth. I started my PhD's journey on blockchain technology, mostly in organizations like supply chain, for instance, and the corresponding problems of blockchains, mostly related to privacy and also scalability, then also drove me into a lot of cryptographic protocols like zero-knowledge proofs that can help mitigate those issues. And because blockchain technology and ZKPs were often discussed also in the context of identity, this also naturally led me towards the identity space. And in fact, already in 2021, I published a paper with a few colleagues where we looked into how we can design a compliant and fully private payment system for the digital euro, so a CBDC. At that time, it was not blockchain-based. We could have done it in a blockchain-based way, but essential was that one of the main findings when we discussed this also with regulators is that, and maybe we will discuss this later on, a unique digital identity can be considered a prerequisite for a payment means with very high privacy guarantees for compliance reasons. And at that time, a lot of people said, well, but solving this unique digital identity will probably be more challenging than like implementing this private payment system. And now, fortunately, today, the new eIDAS regulation was published. And so maybe we can use this as an anchor, even though, as we will probably see from a technical perspective, what is foreseen there currently would not be enough. But I think a lot of important building blocks have already been laid, and we can try to work with that.
Johannes, that already included somewhat of an opening statement, which I would love to just get in from all of you, be that more on the digital identity side or on the digital euro side, or of course then the intersection thereof. Matthew, do you have any initial thoughts on the topic?
Yeah, I mean, whenever it comes to the identity wallet, I think there's some really interesting questions whenever it comes to the issuance of the identity, who's in control of the private key at every points in the supply chain of that, if you want to think of the supply chain of the private key itself. And is there any potential risk whenever it comes to the honeypot for say hackers? And what's being done to potentially mitigate against identity theft and these things, because often you have regulators and policymakers who don't necessarily have the technical expertise as far as security researchers to be able to create robust solutions to mitigate these concerns. So maybe, Johannes, you might have some more insight into this whenever it comes to what's being done at the regulatory level to address some of these concerns. I'm actually just fundamentally curious what's being done as far as that the issuance of say the private key for with respect to a particular identity, and then how does that get certified by say a member state or by some other authority, some other regulatory body that is given that delegated authority to go ahead and authenticate a particular identity.
Yeah, so indeed, this is a very interesting question also because I feel that a lot of the ideas behind the EU digital identity wallet are somewhat affiliated with this notion of self-sovereign identity, which is highly driven by, I think, liberal ideas and also of total control for the user. But if you want to align this with a regulated business environment, then you will probably need to concede some of those ideas. And indeed, I think what remained is basically the idea that we carry with ourselves in our digital wallet lots of different attestations, which we can use at any time without asking the authority that initially gave them to us. So just like in our physical wallet, we have those plastic cards, we now essentially have electronic equivalents of those plastic cards. I don't think it makes sense to expect that we can get along without any trusted entity that issues those proofs or attestations in the first place. But what we can hope for is that those, once they have been issued, cannot be used to track us or need to be involved in any interaction we decide to do that makes use of those digital attestations. And I think this has been implemented very nicely now also in the eIDAS 2 regulation. So there have been a lot of concerns that, well, government provided digital wallet may lead to very bad privacy. I think it's already a very, very good improvement compared to the status quo. If we think about login with Google, Facebook, and the like, there has nevertheless been a lot of criticism by scientists who say, well, it's nice that you provide this privacy by design because of purely bilateral interactions between users and the services without involving the issuers. And there will also be what is called selective disclosure. So you don't need to reveal like all of the parts of the document to the relying party, but only the ones that were asked for. But nevertheless, we could do better by means of, for example, zero-knowledge proofs, because still the verifiability of those documents includes a lot of cryptographic metadata that is uniquely identifiable, and therefore you can be tracked. Now, I think this is still much better than the status quo, as I already said, but it makes sense to work on those cryptographic techniques that can also avoid those unique identifiers. And we know that those techniques are there in the form of zero-knowledge proofs. I guess a lot of people are working on that right now. It has also been foreseen for the EU Digital Identity Wallet because the regulation explicitly mandates that there should be unlinkability. But the standards that would allow for unlinkability are only one of the optional formats for digital attestations. So for instance, based on BBS signatures, so a specific type of zero-knowledge proofs. And those, unfortunately, are not powerful enough to be aligned with, for example, other regulatory requirements, like, for example, hardware binding, when we need a high level of assurance in some contexts that are particularly require a specific high level of security. And I think right now, from my perspective, we don't have a solution that aligns both. So the highest level of security with the highest level of privacy. And now a lot of regulators that need exactly this combination for their eID are discussing how they can achieve this. And so one version is to use quite exotic and quite new fancy zero-knowledge proofs that are general enough to address both of these issues. From my perspective, in the long run, it's highly desirable to go that road. But for the short term, because this is not standardized, we probably can't expect that this will be implemented. And so there is also a medium-term solution where probably a lot of governments will go towards remote HSMs, which then spoil a little bit this ideal of carrying with us our digital attestations. But I think for basically the government-issued eID, we can accept like maybe a slightly different solution, as long as the wallet then serves still as a container that we can use for a lot of other digital identity documents that are maybe less regulated, like our library membership card or our sports membership card and the like.
So I just want to, maybe clarify my question. I know this is maybe a little technical for the audience, but I think it's very important to have a proper understanding. I completely agree that there's going to be this trade-off between the privacy and security side of things. And then, as far as the medium-term or short-term solutions are concerned, I guess what I was trying to really question was not whether or not you have attestations by the government or by member states to say, okay, yes, this credential is valid. It's more about the entire process of creating that actual private key. Whenever you have in your PKI, your public key infrastructure, you're going to have a public-private key pair. And the actual creation of the private key, if that is actually handled by the member state, to me, that seems like a very high-risk security concern, because how do you know that this is not going to be stored in an insecure way? It becomes a potential honeypot for hackers, either the Lazarus Group, North Korea, and so on and so forth, or even just other rogue actors, and so on. And so, to me, I'm just curious: is there a way for, say, this, from a self-sovereign identity perspective, you have the users issue the credentials themselves, but then they go through some other process to say, look, here's my passport, here's my national ID card. Now I want to go ahead and add and attest and say, yes, this is my personhood, my natural personhood to this public key. And then at that point, you have an attestation from the issuing authority that says, yes, this public key is associated with this person. And now you have that additional authentication as opposed to the member state issuing the private key directly to the citizen, which to me seems like has huge security risks. So it's more about taking a step back and looking at some of even the more basic questions of issuing credentials to citizens.
Yeah, so I think this was never really an option. So, I mean, we already have quite a few eIDs in Europe where the user has full control over their key pair. And I think it won't be different in the EU Digital Identity Wallet. So you create your key pair on your mobile phone, and then you basically give the public key to an authority and ask them to issue a credential to this public key without ever disclosing your private key.
Awesome.
There may be additional requirements. I mean, for example, for an eID, you want to bind this to a secure element. So you better make sure that your public key comes with a hardware attestation chain that basically proves that this key was indeed generated in a secure hardware. But besides that, users will not, and I completely agree. So also from, for example, the perspective of a security agency or a certification body, they would never accept the risk of a centralized collection of private keys by the government.
I'm just asking the questions. I'm also from the States, so I don't know exactly all the regulatory requirements that are being done, and these are just basic questions. But I think that helps give the assurances that things are actually being done in the correct way. Especially from just the basics, right? I mean, and at least that's good news to my ears, from that perspective.
Yeah, I think indeed it's very important, this whole issue about anonymity or pseudonymity, and because to the people it's very important, and I think it's a criteria which also will decide on the success of not only the identity wallet but also on the digital euro, where it is not clear yet if payments will be if it will be able to do pseudonymic payments, at least up to a certain threshold. And there should be able, in my view, but it's not clear yet. But the fact that technological wise it is possible to have these this kind of anonymity is very great, and I hope that the EU Commission will take this into account, because for many people it's really very important. And another step that the EU Commission has also taken in this respect is to have it enshrined in their law purpose that the cash money will still be there. So which is obviously the most anonymous form to make payments, but even so, I think that for the digital euro to be a success, it is important to have also a feature there which grants to the people that their payments can also be anonymous. And the big, let's say, advantage of having a digital euro is obviously that you can make your payments in all over the Eurozone, in all countries of the Eurozone, and you can do it offline, you can do it online, you can do it in for online payments and for peer-to-peer payments. So you have all the bandwidth of payments there in one payment system, and this is I think a very also a competitiveness advantage and an improvement for the efficiency and the integration of the Eurozone. So it's in this sense, I think it's the more important that there is an acceptance of the people, which depends very much on the anonymity issue.
We've now connected the two worlds a little bit after Matthew has been assuaged a little bit there with the privacy concerns. I think, Andreas, what's first to come to your mind when hearing these topics, either digital euro or the identity?
Yeah, I warn a little bit to overestimate the synergy potential between the EUID wallet and the digital euro. From my point of view, it can be assumed that the wallet will influence the digital euro, but not on a core infrastructural level, more than on the level of identification, KYC, authentication as a strong customer, as a second factor for the authentication of payments, but not for the core infrastructure. This because we are on different level of development. The EUID wallet and the eIDAS regulation, or the revision of the eIDAS regulation, is already come into, or will enter into force in approximately 20 days. And for the digital euro, we are still on a discussion level for the infrastructure. So we are, or the EUID wallet is much more further. And we have to admit that the EUID wallet is designed, or legally designed, by the European legislator for the European tool of identification, authentication, of signing, and storage and transfer of attributes, and in particular personal data. The EUID wallet should have, or shall have, a pseudonym function, but it's very focused on the storage and transfer of personal data, of public credentials, of public electronic attributes. And so we have different playing fields here for the EUID wallet, with a focus on regulatory or personal data, to identify the user, to authenticate the user, to have attributes directly linked to the user. And then we have the digital euro, where a strong focus is on anonymously payments, and in my opinion, also the privacy or data protection problems or discussions of the EUID wallet and the digital euro are quite separated, or are different. For the EUID wallet, we had discussions, for example, for this unique identifier, or unique persistent identifier, to have a really, or to have a common number for a person, to allow identity matching, in particular for cross-border use cases, but also for only national use cases. This unique identifier is not in the final version of the eIDAS revision of the EUID wallet. So there they use the already established solution only for cross-border use cases in an official, in an administrative context, and the identifier don't need to be persistent. So you need only a unique identifier for the respective wallet instance, but not for the person per se. And then other data protection concerns for the EUID wallet were primarily related to the electronic attributes. As stated before, the problem of traceability, linkability. Then, of course, there is also the possibility of zero knowledge proofs, but it's not a real direct functionality of the wallet. It's more in the recitals of the eIDAS revision. So it's more a wished feature and not a core functionality of the wallet. So we have to be aware that the focus of the zero knowledge proof mechanism is not in the focus of creating the wallet. It's more like a second stage development. And then we have we have the discussion of how I can control, or how can the wallet control the access of the relying parties, which collect data from the wallet, how to ensure a verified identity of these relying parties, and how to prevent that these relying parties gaining more or gaining access to the to more data they need. That were the core discussion points from a privacy and data protection point of view. And then we have this very clear focus on how to perform anonymous payments in the digital euro environment. And I think there is a difference here. So I think the EUID wallet will be an identification tool, an authentication tool for the digital euro, but will not be the one wallet or one usable wallet for digital euro transfers. I think there will be a separation between, or in general, at the first stage, between digital euro with other functionalities, with other mechanisms, and the EUID wallet. There will be synergies, but not on the core infrastructure level.
So I want to actually ask what you mean by core infrastructure. So for me, I hear core infrastructure and I just think public-private key pairs. And if we're thinking of the digital euro as operating on a what we think of the blockchain industry now, the distributed ledger technology, now you still have some type of public-private key pair that's being used to authenticate and authorize transactions. And if that's the case, now you have pseudonymity and you have this. I mean, you don't have anonymity right away, and you don't have this ability of well, you do have the ability of potentially tracking down the financial transactions of users. And if one of the policy goals is to actually have anonymous payments, then this seems like you almost would need to, at the least, provide some type of delegation authority from, say, your primary user identity, you're the EU digital identity wallet that a natural person has. They go ahead and delegate, say, payment authority to, say, a quote unquote hot wallet that's associated to themselves for authorized payments. And now they go ahead and use a zero knowledge proof type system to go ahead and do private transactions. That builds into, say, the banking infrastructure to verify anti-money laundering, terrorist financing, sanctions lists, all of that fun stuff. But you haven't necessarily removed yourself from the core infrastructure of just basic cryptography to enable these types of payments. And without adding in those sorts of additional attestations and sort of additional sort of segues into these other technology stacks, I fear that there's too much linkage or availability for transactions to become publicly known and identifiable, and that seems to be and I can agree if you're saying that, look, we're not going to have your particular identity is going to be the primary one that's making and authorizing payments, but that's not necessarily going to be the case anyway. Whenever you're talking about the EU digital identity wallet, you're always going to have people to go ahead and create sort of secondary identities, that are from the master identity that has certain information, that has certain authorities, has certain delegations regarding what can be shared, what can't be shared, what is included in that particular identity from that sort of root level authority. And so I just don't see it as much difference than, say, adding a secondary identity that's specific for payments that allows the citizens to go ahead and make transactions in that fashion. So I mean, in that sense, I guess I'm trying to understand what you mean by core infrastructure. Do you just mean, yes, we're not going to have people to go ahead and use the digital euro with their primary master identity Yes, I would agree with that. But to sort of throughout the whole idea of public-private key cryptography just seems like it's doesn't make sense to me.
Yeah, I mean, with the core infrastructure, the general technology approach of the means and tools. For example, in the architecture reference framework of the EUID wallet, which is currently drafted by the eIDAS expert group at European level, we have a tendency for classic PKI usage, and DLT and blockchain is still possible for creating the wallet, but it's not it's not probably or not the probable choose of means here. And another example, in Germany there is a national consultancy process for the EUID wallet, for the economy and for NGOs and something like that. And one of two basic conditions of this consultancy process is no DLT-based or infrastructure architecture for the German EUID wallet. And so, I mean, for the digital euro, I see a DLT-based approach, a blockchain-based approach, and for the most of the European digital identity wallet, I see a more classic certificate-based approach, a more
But even
classic,
if you have a classic PKI
yeah.
setup and you're not doing you're just issuing credentials and you just have attestations that are being done, you still have the ability of the users, of the citizens, to go ahead and create their credential, get the attestation from the authorities, but then that credential is easily portable to a DLT. You just add it as a private
Of
key
course.
to your wallet, and there's no reason why people wouldn't be able to do that. And at that point, you already have all the linkage. You have all of that public knowledge regarding this particular wallet for payments is now linked to this digital identity. So to me, it's just a question of what do we mean whenever we're talking about the issuance of credentials versus the ability of say, okay, I want to migrate these credentials to a payment solution onto a DLT. Well, I mean, that's kind of it's to an extent, it's a little silly to say that these are fully separate. I mean, it's just a way of saying that you're able to create the credentials on one system and then migrate them to another. Okay, wonderful. That's exactly how the math works. I mean, this is just how it is. So I don't know why we wanted to go ahead and really focus on, oh yeah, these are fundamentally different. Yeah, of course you could have one database that has only attestations and only has things like that over on sort of like a centralized server or whatever you want to call it, versus having whatever, an immutable or non-transferable sort of soul-bound identity wallets on a blockchain. Well, it's the same thing. I mean, it really is the same thing. Now, is it just a matter of where are you issuing the initial credential and then where the attestations are? Well, that's fine. I can go ahead and issue a credential, have the attestation from a member state, and then I take that proof and I just publish it on a blockchain. There's no difference. It's just there. It's just freely available to use. Why would we want to restrict the this level of commerce and of maybe streamlining some of these opportunities with the technology just by only having it at on a classic PKI setup?
My general point was more there are presentations and speeches of EU officials who mean that, or who said that the EUID wallet should have a payment function with the digital euro, and I don't think that will be very probable. You will have a connection, but the EUID wallet will not be the wallet of the digital euro. You will have separate wallets, one for the identification, maybe the authentication part, and one for the storage of the digital euro.
No, and that makes sense. I think the other question is, to what extent is there sort of, with this level of portability, what kind of use cases are you able to sort of establish by operating in this DLT setting? Say you still go ahead and have the classic PKI, you go ahead and issue the credentials, all the attestations are on this other database. Now you port them over to a blockchain just because there's smart contracts. You have Turing complete smart language. You have Turing complete languages for basically any type of computation you could possibly conceive of to actually perform different types of applications, whether or not it's for like, say, medical sharing of data, or do you want to go ahead and do payments? I mean, in a lot of sense, if there's not that functionality at the identity wallet level, then you're automatically going to see private industry coming up with solutions to allow for these types of applications to be developed and deployed on public blockchains, or even private blockchains for that matter. It doesn't really matter for that, whenever it comes to this, but there's just so much more functionality that will exist in that world. If there's just only, oh yeah, I have a static database that can do nothing more than attest to the identity of a particular wallet or a particular public key. So that's fine, and I don't think that there's any real issue with that. And I'm all for agnostic solutions whenever it comes to saying, look, we shouldn't necessarily be putting one particular identity on a particular chain or a private chain. It needs to be sort of portable, but at some point, the functionality you're losing out on. You sort of don't have this sort of expansive opportunity for different applications that can be built out, whether or not it's in the public sector and the private sector.
I guess also to pick up this maturity argument again, so it's very unlikely that in the first versions of the EU Digital Identity Wallet, we will see a means of payment, because it will take longer until this is implemented. But I could also imagine that specifically if member states decide to leave the implementation of their national wallet to like private sector, and at some stage the implementation of the digital euro is ready, I would be surprised if nobody just uses, I don't know, the 2 SDKs or whatever we will have in a single app, and to make it more convenient to have authentication and payment in a single user interface, even though maybe the backends do not have a lot of interactions except for the initial onboarding plus authentication step.
Yeah, I agree. I think that for convenience reasons, there will be kind of natural development that the payment possibility will be added, and if there is no digital euro from the central bank, then they will add, well, e-money, digital euro, or the usual electronic money that we have today. So it would make quite a lot of sense. If there was the same technology for both, so let's say both the digital euro and the digital identity wallet used blockchain or DLT technology, then you may have even more possibilities to make payments with attached information that is necessary for this payment to be accepted. And this could be also bring new innovations and new business models, but it seems that this compatibility of both systems is not planned yet. And well, and indeed, we are quite far away still from the digital euro. We even don't know if the EU Parliament, which in the new majority result, which will result in after June, if they are really keen to bring this law about digital euro forward. So this is another question, which is more on the political level.
So I appreciate you bringing the timeline here, because you already mentioned also the new anchor that cash was given in the regulation that came out last year, end of last year, and that also at the exact same time we saw the digital euro project moving forward in terms of regulation, at least. I'm wondering, just because the discussion got quite deep quite quickly, I'm wondering if we can backpedal one or two times and just kind of look at what is the current status actually of the European Identity Wallet. So in terms of the timeline, I know you mentioned it already, but just to put it in a couple of sentences, maybe, where do we currently stand? Does it affect every single country, and how are they then in autonomy able to make it their own solution, and how does it fit in with some of the existing solutions that we also have, for example, with Bank ID in the Nordics and such, that is issued by banks currently? Is that the same thing, or how does that compare to what is now being proposed in the electronic transactions in the internal markets regulation?
Yeah, then
Yeah.
I will take it. Yeah, the eIDAS revision, you have to say the original eIDAS regulation is from 2014, and so we have here the eIDAS 2.0, or the eIDAS revision, and it was adopted by the EU Parliament on the 29th of February, and by the EU Council at the end, I think, of March. And it should be published today in the official journal of the EU today. It will then enter into force after 20 days, so probably on the 20th of May. And then various deadlines will apply. The first one is within 6 months. The EU Commission must adopt concretizing implementing acts to make more concrete stipulations for the EUID wallet and the functionalities and standards and similar things. The member states then, after adopting the implementing acts, have 24-month time to establish the EUID wallet. So the timeline for the EUID wallet will be around the 20th of November 2026, if the timeline is perfect here. And the member states have the possibility to issue a wallet by their own, or to engage a company to issue this wallet, or to recognize a private developed wallet. These are the 3 possibilities of the eIDAS revision here for the EUID wallet. So there will be 27 wallets in the EU, and maybe more. So the member states have also the possibility to issue more than one wallet. And at the infrastructural level, there is this architecture reference framework I already mentioned, the architecture reference framework is currently at version 1.3. It contains technical specifications and advisories for the EUID wallet for all functionalities, for the personal identification data, the derived eID, which will be the core identity of the wallet, for the authentication mechanism, for questions around the wallet keys, of the credential, and so on. And more gaps are being closed within the progress of this architecture reference framework. And it's probably that in one of these implementing acts by the EU Commission, the contain of this architecture reference framework is referenced there. And on a different level, there are also large-scale pilots that are test scenarios where member states and associated partners from the society or the economy are testing various use cases in currently 4 different project groups in preparation for this wallet. And for this context, there was also the development of a so-called reference wallet, which which is based on this architecture reference framework, and which is there for the test use cases of this large-scale pilot. And then in every member states, you have a creation process of these wallets. As stated before, in Germany, you have this iterative consultation process. Yeah, that's shortly the state of the EUID wallet from my point of view.
Thank you for sharing. It was very concise. And I mean, for those of us who have the digital euro roadmap in their heads, I mean, the overlap is there, right? If it only comes into effect in a couple of years from now and elections might postpone things, we'll see how far apart these two actually end up being. So maybe a question to you, Cyrus, would be interesting to learn from your perspective. How do you think the design of this ID wallet is either going to intersect, or as we kind of talked about, if come into effect before the digital euro is decided on, we're going to assume it will come for this discussion maybe, then, and how far do you think there could be some carryover from the experience that the EU would have with the digital identity wallet at that point, that could then still carry over into the digital euro, also knowing that the regulation for it is discussed right now and will be ratified not too far out from here. And so how much room for play do we actually have from your perspective from that wallet?
Yeah, it's a good question. Well, first, both projects have obviously something in common, because you have today you have private versions of the digital euro, if you want so, which is the deposit money of your bank and of your current account, and which you can transfer electronically. And you have also private versions of identity wallets. And so the wallet for your train ticket, or the electronic ID card from Germany, for example, which is also can be used for electronic identity. But now you want to have this parallel to these private versions. Or the state wants to offer public versions. So with the target to implement something more trustworthy than the private equivalents, which are accepted all over the European Union, and in the case of the digital euro, in the euro area. So the issue of the digital euro and the issue of the EUID wallet are both the public sector, and namely the central bank on the one hand, and probably on the other hand, the Interior Ministry. So it's both a kind of government solution. And in both cases, the public sector is planned to deliver a basic platform which the private sector is able to use to innovate more sophisticated versions. So in this sense, I think it's very important that the digital identity wallet is really a success, to make also the digital euro a success, because the people will look very much, the public will look very much on this thing, because the basic idea is very, very similar. And so it's kind of political dynamics which are coming out of it, I think. And if the design is accepted, and anonymity issues are integrated, data protection is successful, and there is no identity theft on a broader scale, and so on, then I think that then the step for the euro could be even quite easy for the digital euro to be implemented. And so there I see quite, let's say, common ground and an important impact on the success of the digital euro.
Johannes, Andreas, Matthew, do you have anything to add to Cyrus' assessment of the situation?
Yeah, I mean, I think that you're right in a lot of sense that there will be definitely a lot more trust from the member states that are issuing the identity and sort of having more on that front. I do think that there will be it'll come down to the allowance of portability. So if we just take a step back and think of this as public key infrastructure, public-private key pairs, and natural persons receiving some type of public-private key, and then having attestations from the member states or from some authority to say, yes, this is your root certificate, your primary identity, and from there, minimal functionality to allow for delegation of different sort of functionality, whether or not it's for driver's licenses or for medical use cases or for whatever. But then once that sort of limited delegated authority happens at sort of the centralized public structure, having that ability of saying, look, you have this public key and you have the private key, so then allowing for that kind of portability to say DLTs and to the sort of allow for the private sector to come in and build out their use cases. I think that there's I mean, on the front end, most people won't necessarily see what's really happening, but you'll have some basic linkability, not linkability in the sense of whenever we're talking about identifying a particular identity with a person, but linkability on the back end for streamlining and making this process between building out these applications much easier. So I mean, on the back end, you'll just have basically two APIs that are connecting to one, the public sector, and this public PKI with a particular member state that can create new identities for particular use cases, but then automatically port that over to say to some blockchain, whether or not it's Ethereum, Cosmos, Solana, Allo0, who cares what it is, to give the users, you give the people there the opportunity of what they want to be able to do that to. And then building out these applications at the private sector, I think that's probably what's going to happen, only because private industry is going to build out solutions much faster than the member states are going to be able to, whenever it comes to, say, digital euro solutions. So it's not so much that you're going to see a lot of overlap, other than, yes, you have this identity, you have your wallet, that's sort of in a separate sort of isolated use case. But then just because of the nature of public-private key cryptography, you're going to have that portability. It's going to be automatic. It's inherent in the entire system. It's inherent in the mathematical structure of being able to have attestations that you can port from one particular solution to, that's done at the public level, to allow for private industry to go ahead and build on top of that and create new applications and create new solutions. And it's just, you can't stop it. It's there. It exists. There's absolutely no way to be able to not allow for private industry to be able to do that, unless you want to go ahead and say, hey, look, we're going to regulate and say you're not allowed to port this over to a private wallet and create these types of applications. So it's inherent. It's just, it's sort of a freebie. It's a given. So let's maybe take a step back and try to understand, well, what are the real applications that we have, and what can be done at both levels, and whether or not it's endearing that public trust, and then on top of that, allowing for the private use cases to exist and to go ahead and push this forward, so that there's more more services that can be provided, or there's a better public-private partnerships that become enabled. I mean, to me, this is just obvious. This is exactly where this is going to go. And that doesn't mean that you're not going to have a digital euro at some point, say 5 years down the line, but once you have this identity wallet sort of figured out, I mean, Circle, they'll just be able to go ahead and issue a digital euro on the Ethereum blockchain, and they're already doing that. And they can go ahead and use the exact same identity solutions for their application. And to me, it seems a little naive to think that we can stop that, just because it's just how the technology works.
Maybe there is a small caveat there. So I completely agree that if the user controls a key pair and also the corresponding attestations, they can prove statements about that to whoever they want, be it some relying party or be it directly a blockchain. However, there is a lot of discussions regarding the certification of the relying party. So you can imagine that if I use the same cryptographic key and the same attestation for a lot of different relying parties, then nobody protects me in an interaction with maybe a malicious relying party, that this relying party forwards the information I send in a man-in-the-middle replay attack. And therefore, at least for the higher assurance levels that are determined by regulation, there will probably be some requirement for certification on the side of the relying party, that they present, for example, their own attestation, maybe in the form of a QWAC or whatever, that they are eligible, that they are, that they have gone through a certain certification process in which they demonstrated that they are a reliable entity. Now, can we enforce this well? Probably not so much, because still all of the key pairs and the attestations are on my mobile phone, and so probably I could evade this protection somehow. But I think it's still open how this will be implemented. So whether there will be a similar warning as we have in the browser, where if the certificate of the service provider is invalid, then maybe I can do 3 clicks and then I can circumvent this protection, but then I should know what I'm doing. On the other hand, I think for eIDs, governments try to incorporate a stronger degree of protection, like we have it for the German eID, that I'm not even allowed to present anything from the eID to arbitrary services, but only a very small restricted set of relying parties that have those kinds of certificates. So yeah, I'm eager to see how this will turn out, because on the one hand, we need those security safeguards, but on the other hand, we don't want to have a strong restriction of what we can do with it, because then in the end, I cannot use it in a lot of contexts where the relying party is maybe an individual and doesn't have an incentive to go through an expensive certification process. Could also be the case that some fancy cryptographic tools like designated verifiers, zero knowledge proofs, could come in handy at this place, but I think that will go too deep now. What I also wanted to add is that because we have this portability and we can use the attestations in many contexts, from my side, the additional value of the EU digital identity wallet is pretty clear. So I see a number of great benefits if we have a functioning wallet and a functioning ecosystem that accepts like attestations issued by other entities. For me, it's a little bit more difficult to see the immediate benefit of the digital euro. So I understand that merchants like it because they don't need to pay as much to credit card companies, etc. I understand that the central bank likes it because maybe if it loses relevance in the domain of cash, then it has another angle of enforcing monetary policy. But from the user perspective, the additional value doesn't become that clear for me right now, because we're discussing substantial limits, so thresholds of a few thousand euros per month or something like that. We already have an electronic means of payment that we can literally use almost everywhere, and where we don't need to care about security in the sense that the money could be gone because it's protected until 100,000 euros. And so I don't really see a strong reason for a user today to use the digital euro, expecting that probably in terms of user experience, government solution will also not be much better than what the private sector offers today. And so from my side, privacy could be a selling point, or maybe one of the only selling points to users to actually adopt the digital euro. And I'm a bit worried that right now privacy doesn't seem to play a major role on the roadmap for the EU digital identity wallet. I felt that this is very nicely ingrained. It is by design highly private. And then on top, we have those mentions of unlinkability and ZKPs, even though I agree that this is not too serious right now in terms of practical implementation. But for the digital euro, I mean, we've seen cumbersome things like the anonymity vouchers, where basically the central bank promises that they won't look at the data and that they will forget about it. And I mean, we have learned, I think, from the history that this is maybe not the most trustworthy construction and has a lot of faults. And so I think we really need some solutions that promise us cryptographic assurances of privacy. And if you think about that, then in combination with the thresholds, we probably need a very good and very versatile privacy-friendly digital identity to make sure that, for example, access to anonymous payments cannot be passed on too easily to somebody collecting like 100 identities and then circumpassing all of the different limits. So I feel that this perspective is currently completely missing in the discussion, or at least not as prominent as it should be, if we think about incentives for users, why they should adopt the digital euro and not stick to the electronic means of payment they are used to.
So I want to actually take a flip side and not talk about the public use cases, or at least the private persons use cases of the digital euro. But what about the transparency use cases of public bodies in order to be able to showcase where the use of taxpayer funds are going? And instead of being able to do public records requests, to be able to have access to this and requesting this information from the public bodies, but instead making that just immediately available to the citizens. What about that angle on the transparency side? So it's sort of transparency at the government side of things, but then privacy for the people.
Well, I don't know how much transparency consumers would like in this context, but what I see is that you have an important point, Johannes, that the tool of privacy, which is technically possible, is not used, and it could be indeed a good selling point. But leaving this aside, I think there are still some points which can be quite convincing for people, or let's say which will help to have a broader acceptance of the digital euro. You mentioned the lower fees for merchants, which is true. This is the purpose, to have really also granted it by law that the fees for making payments with the digital euro will be significantly lower than the fees which are have to be paid with private payment systems. And while consumers are not making this payment directly, obviously indirectly they're doing it, and so if merchants have to make lower fees, then obviously in the area of merchants, they will say to the consumer, hey, I would rather like you to pay me with a digital euro instead of Visa or MasterCard or EC. So by this way, I suppose that, and that's perhaps also the idea of the EU Commission and the European Central Bank, the digital euro will get more acceptance and get a broader acceptance. With respect to the threshold, I think it's indeed a kind of contradiction, because the threshold of, I don't know, something between 300 and 3,000 euro is in a way a contradiction to the idea that what we have with cash money. Cash money is indeed the anchor of the monetary system, because you know that if you go to your bank and ask for having changed the deposit money into central bank money, which is basically cash money, then you get it. And so it's a kind of anchor for the whole payment and banking system to this central bank money. And now you want to have not necessarily instead of cash money, but certainly to a lower degree, it will play a lower degree in the economy. So you will have this central bank digital currency, which in a way should also be an anchor. But if you are not allowed to put it under your mattress, this money, and so you have this very small threshold, then this anchor function is not there anymore. And I would really see a case for as a compromise to increase this threshold to, I don't know, 15,000 or 20,000, so that you have, on the one hand, in check the risk that all the people will withdraw their money from the banks and put it onto the digital euro account, which would be a digital bank run in a way and could destabilize the whole banking sector, and preserving the anchor function of a central bank currency. So this would be also a thing that it would increase and would be a selling point for the people. But it's so ideally it would be three things: anonymity, higher threshold, so that people are really seeing, okay, it's a kind of storing at least a part of my wealth. And the third thing is that the merchants, and this is obviously very important, pay lower fees and therefore will convince the people to pay them in digital euro instead of other means of payment.
So why would it be the case that you couldn't have the digital euro assigned to, say, your bank deposit, like your bank account, and say, look, this is still within the traditional banking system. We're not going to destabilize the traditional system, but instead of having the ledger being an internal accounting system on the bank's books, it just is now on the digital euro system that just says, hey, look, we're assigning the deposit to your bank account. They can still go ahead and, these banks, that are not necessarily the same central bank, can still go ahead and do their traditional lending and all of that process. But it's just an accounting mechanism and an upgrade to the system to allow for cheaper merchant fees for people to accept the digital euro instead of using like the Visa, MasterCard payment rails.
Yeah, but it's a very important difference if you have the money in your central bank account, or if you have it on your deposit account at the bank, which is private money. So the bank can make use of this private money, but cannot make use of the central bank money.
So, and I guess that's the question: is the digital euro specifically being designed in such a way where it is only central bank money? But why not sort of suggest and push back that this is too disruptive to the traditional system, and instead let's just treat it as a new accounting mechanism so that the existing banking infrastructure can more or less just continue as is and doesn't have to have that level of disruption. I mean, and this is still my understanding is still being very much designed and being suggested by industry players as to what should and shouldn't be done. So is it the case that you're necessarily going to have it where the central bank is going to allow for arbitrary consumers to get access to their own central bank account? Or instead, do you want to go ahead and have sort of more of a tiered process like you do now, where, okay, the only people who do get a direct central bank account are the existing national banks or other banks in the existing infrastructure, and then you still have the general consumers that have their traditional bank account, and all you're just doing is saying that, look, we're trying to upgrade the way in which the accounting system is being made available and moving money around.
Well, I'm not sure, but I think that so if I understand you correctly, your idea might be going to the direction that the central bank is doing the loan process, which basically is a task of private banks.
Well, it sounds like that's what that's what you're saying, that they're suggesting, that they want to allow for consumers to have a direct account with the central bank via, that's what the digital
Yeah,
euro
but only for payment reasons.
only for
Nothing
payment
more.
reasons.
Only for
But
so
then-
basically the digital euro is a payment system.
Uh-huh.
As it is designed right now, it is basically a payment system. And that's
Sure.
also the reason why, well, this fits also to the idea of having thresholds which are very low. In the case of businesses, the threshold is even 0. So you have this waterfall system. So if a company, for example, makes a payment through the payment system of the digital euro, then it does the following thing. It let's say it wants to transfer 1 million euro to another company, and then there is 1 second where the 1 million from the deposit account is going over to the digital euro account, and immediately it's going from the digital euro account to the digital euro account of the company, of the other company, which is the receiver of the payment. And given that there is a threshold of 0, this payment of 1 million is immediately put onto, after a second, let's say, onto the deposit account of this receiving company. So on the digital euro account of these both companies, there will be never sustainably really money on it.
Okay.
So it's really for the purpose of payments.
Okay, so at the end of the day, it's not really going to be as disruptive to the banking infrastructure whenever it comes to
that's the idea
your end to be able to still
of this threshold, because the banks are fearing
because of that threshold. So you can't keep you won't be able to move the money that's in the deposit and the accounts out of the banks because of that sort of low threshold.
Right. And the banks fear that or there will be these bank runs, or they would have to pay more money for their funding, so having interest rates increased to attract more money.
But then that's my sort of kind of my point, is that say there are those fears because they increase the thresholds and they allow for that to occur, why not allow for the banks to accept the digital euro as a deposit, and then now they get to go ahead and include that in their books?
Well, it's like you're saying the banks should accept cash money, which they do, but
in digital form. I mean, everything's already digital anyway for payments through, from your bank account. If you want to make a SEPA payment in euro, it's all digital anyway. So it's it sounds like it's an accounting mechanism and an accounting trick. Where is this?
No, it's more
money located?
It's basically, you could have also a system where the European Central Bank is the one who manages all the accounts of the 450 citizens, or how many other in the Eurozone, a little bit less, of the citizens. But obviously it's very costly, and so the ECB and the European Commission decided, okay, let's use our banking system, and they will do the onboarding. But basically, these are central bank accounts, which are not in the ownership of the central bank, but which are, administrating central bank money, and which should be very strictly separated from any use or misuse by the banks.
So the idea is that no longer the deposits of that central bank money couldn't be used in, say, some type of rehypothecation scheme to go ahead and allow for over-leveraged lending in a like in the mortgage markets or whatever. It's strictly no longer available for the use of the traditional banks for say lending purposes.
Right. It's separated.
But why? But I mean that's the idea. But
because if I am really going to storage some 3,000 euro, I want to have the guarantee that I get it back. And if I know that the bank is doing some loans with it, and I don't know if I get it back.
I agree if you have the lower thresholds. My suggestion is that if those thresholds become higher, and that creates that kind of instability through the bank, with the banking infrastructure, I would imagine that the banking system would push back and say, allow for us to have this as deposits.
No, there are other mechanisms. Then they go to the ECB and deposit some collateral and get liquidity from the central bank through other ways, and which
I mean,
I'm not sophisticated. Since the Lehman Brothers collapsed, they have very sophisticated ways to provide banks with liquidity, and so it's no need to take the central bank money of the private citizens.
Okay, I'm just curious. I mean, I'm just trying to understand what the what the potential risks are from the banking infrastructures. From what the various banks are concerned with whenever it comes to the destabilization risks, and it seems like, well, that would be a fairly simple solution. Is this, well, allow for them to accept that as a deposit, like and on their book of records. So and maybe
there's another,
maybe that's something you can maybe expand on, is what are the destabilization risks that the banks see whenever it comes to the digital euro? I'm just a little confused as to what those are.
No, I think in the way it is designed right now, the destabilization risks are not very great in the way we discussed it right now. Obviously, the biggest fear is that there are technical issues and the infrastructure is not working as expected, and then the trust in the system will wane. So this is certainly a big issue. But the way it is designed right now, I don't see any risk. But having said that, I think we can have also this kind of stability with a higher threshold, which would support the anchor function of central bank digital of central bank money, of digital central bank money. So this is I think that we don't need to go so low in our threshold. Basically, there is also another way to steer or to avoid destabilization risks, which is that you implement an interest rate on the digital money, on the digital euro. So in this interest rate could also be negative. So if there is stress in the market, then you put a negative interest rate on the digital euro, and then you make it very unattractive to deposit, to move your bank money to the digital euro, because you have basically to pay a fee for it. This has been a purpose in the beginnings of the discussion about the digital euro. It has been excluded. The digital euro will not bear any interest rate, be it positive or negative. But theoretically, this would also be a possibility to handle this problem.
I want to come back to Johannes' last statement. First, I totally agree here, but I see another or more problems here to be solved. I think the digital euro will only have success if it can be treated like cash, but we have to admit that the digital euro more works like common e-money, like already existing solutions in the market. And I see discussions rising up from anti-money laundering experts, which are suspiciously quiet, but I see a conflict potential here, because the digital euro should be treated as cash, but it works more than e-money. And for e-money, you have very strict thresholds or limits for anonymous transactions. I think it's 50 euros, and after 50 euros, you need to perform a KYC process against the payment service provider, and all of your transactions need to be trackable. And yeah, that's a problem I see, how to be very anonymous like cash, but also how to prevent the risks arising from money laundering risks, like the risk of layering of payments, or of smurfing, to use the limits and thresholds. And another problem I see is how to ensure the threshold limits of an individual, because you have persons with two or more different passports or citizenships. You have persons with two or more different residences in different countries, and so on. How to ensure individual threshold for these persons without a unique persistent identifier, which is against the constitution in some of the member states. So you need a mechanism not based on this unique identifier or unique persistent identifier, but also need a mechanism that ensure that this individual threshold for the digital euro. And that's also a big point, in my opinion, to be solved, to establish the trust in the digital euro by the users, but also establish the trust by the regulators, by the financial experts, anti-money experts, and also by police and other security authorities. And that's a question to end around here. If you see there any solution possibility, if you have already existing ideas to address these problems.
So regarding to this challenge that some people have multiple nationalities, I don't have a good answer for that. Maybe one comment. So I believe that the removal of the unique identifier in the EU digital identity wallet was mostly because of pressure from data protection organizations. To be honest, I don't fully understand why. My research is also mostly on the privacy side, but I also acknowledge that a unique identifier can be pretty useful, like, for example, in enforcing thresholds. And as long as I have good mechanisms that clearly show me under which conditions the unique identifier would be disclosed, and that the default is that a unique identifier is not disclosed, I don't see where it is doing any harm. Because, I mean, under the hood, we have a lot of cryptographic identifiers that are pretty unique, that are involved in the EU digital identity wallet anyway. So we could also make it explicit and say, okay, now this is derived from name, date of birth. And if we have a cross-border case that is really important to have a unique identifier, and I mean, if I use my passport, it's essentially also a digital identifier for me, because I only have one, I don't see directly where the harm is. On the other side, so I completely agree that money laundering is probably the biggest problem why we don't easily get a high anonymity payment means in the electronic world. This is also what we mainly discussed in 2021 when we made this proposal for a cash-like private CBDC. And indeed, the idea there was also to base this on thresholds. So I guess we can quickly see that a per transaction threshold is pretty useless if we are talking about an electronic means of payment, because we could do as many transactions as we want. So what we would really need to do is to enforce a turnover limit for a certain account owned by a certain identity. But then, of course, the question appears, well, if you then can trace all of the transactions to one account in order to add them up, how the hell could you get privacy out of that? And this is then where, for example, cryptographic techniques like zero-knowledge proofs can come in, where you have the opportunity to prove that all of the transactions linked to a certain identity without revealing which identity it is, or without revealing a persistent identifier that could be de-anonymized at some stage. You can prove that all of those conditions are met, and that maybe you're processing, or that whoever is processing this transaction has ownership of an electronic identity which was signed by the government, which is neither expired nor revoked. Maybe this individual is also provably not included in some sanctions list that is published. So you can do all of those nice proofs. Theoretically, this is not a problem, and we implemented this. The main challenge that arises is indeed, how can we make sure that nobody gives away their identity to someone else, and this someone else then collects access to a lot of digital identities and therefore avoids all of those thresholds. And I think if we create a new isolated identity for a hypothetical digital euro that has those high privacy guarantees, this will probably not work, because not everybody needs the digital euro. Some people will say, I don't need that. Maybe I can sell for €5 a month access to this nice anonymous means of payments on the black market, or I can be blackmailed or whatever. So what we need to make sure that this access to an identity is not easily shared is we need to employ some sort of device binding, I guess, like to a mobile phone, because my willingness to give away my mobile phone is probably lower than my willingness to give away some password that I never need. And then additionally, it would be very helpful if what we need to give away in order to give access to this anonymous means of payment away is hopefully so valuable for me that I don't want to give it away. And if we now have this digital identity wallet, in which, for example, I can do a lot of useful things, like, for example, authenticating with my bank, but also applying for certain documents with my local municipality, each of those activities that I can do will lower my willingness to give away this whole thing in order to give somebody else, probably even a criminal, access to my means of payment. So this is typically called all or nothing transferability. And so I think if we want to have access to a means of payment that gives us the same privacy guarantees as cash, we need to get familiar with the idea that a unique digital identity is basically a prerequisite with this. And then we can combine sophisticated cryptography with this unique identity and get a nice privacy-oriented means of payment. But it's maybe a bit counterintuitive that this highly unique digital ID is needed in the first place to make turnover limits enforceable.
So I had just a question on what do you mean as far as the requirements for a non-persistent unique identifier? Like what's that all entail? And the reason is because I'm just curious, particularly in the particular nefarious use case of somebody who has two citizenships that Andreas was bringing up, how to make sure that they get around thresholds. My initial idea would be just to say that, look, if you mandate and require each member state would have to mandate that or at the EU level, you mandate that the member states have to implement this particular procedure, that if a person does have two different citizenships or residencies or identities issued by a different member state, they have to do cross self-attestation, and then that would at least mitigate that potential issue. Because at least you're mandating, say that if you do not do this, you are in violation of the law. And so then if somebody does do that, you can go ahead and hit them with additional fines and penalties and say, look, you weren't abiding by the rules. And at the very least, you can just say, look, we know that if you're not being a criminal, then you have done that cross self-attestation. And therefore, this is, we can go ahead and create those limits and make sure that those are, done appropriately. So to me, that seems like a very simple solution, but I guess it, to an extent, requires a better understanding of what you mean by this non-persistent unique identifier, and whether or not something along these lines could solve that particular problem that Andreas brings up.
Yeah. So first of all, I think maybe people having 2 passports and having 2x the threshold is a bit unfair, but maybe not the biggest threat to money laundering we can think of is if the threshold is reasonable. So maybe that's not like the huge deal breaker. And I also completely agree with you that if we say that it's just illegal to use twice the threshold, if you have 2 passports or whatever, you can just do a transparent onboarding process in which you basically register for access to the anonymous means of payment. This would then be not privacy friendly, but also you don't learn too much from a person just registering with this means of payment. And then basically all of the subsequent usage of the means of payment would be fully anonymous and unlinkable. And then you could think, okay, let's just search, I don't know, if you can register with a bank, then all of those banks just check whether basically across different databases you have the same name or a very suspiciously similar name with the same date of birth, and then you can indeed punish them because they don't have anonymity for this registration part. So I would also agree that this is maybe not the biggest deal breaker when we think about access to such an anonymous means of payment.
And I think that you hit it perfectly whenever you said the real problem whenever it comes to money laundering is if somebody wants to sell their identity on the black market to allow for access to the anonymous payments. And I mean, this happens all over the world. I mean, whether or not it is identity farming in Southeast Asia, or it's other persons just providing their credentials to other parties for nothing more than whatever 300 euro to get access to certain financial activity. I mean, these things happen all the time. They're already illegal, or they should be illegal if they're not. But then the question is, how do you mitigate against those types of risk? And somebody, like you say, amassing 100 or 1,000 different identities so that they can go ahead and exceed these types of thresholds. And in a lot of sense, it seems like this is going to be, you can use AI, you can do all sorts of other techniques to identify those types of transactions. And then at least you may not be able to mitigate against those risks directly, but you should be able to try to identify suspicious transactions that might appear to be in that sort of vein, and therefore also try to use more of the choke points at the traditional levels of the on-ramps and off-ramps from and to the digital euro to, say, in the central bank money to, say, bank deposits. And to me, that seems to be the, if it's technically very difficult to stop, right, anyway, well, then what are the other solutions that we have at our disposal to mitigate those types of risks?
I'm sure Johannes has a great answer to that exact question. Thank you, though, because we need to, in terms of just in the interest of time, come to an end here. But thank you for stress testing some of the ins and outs of the European Digital Identity Wallet with us today, and also seeing how that interacts with the digital euro discussion. I think we're all taking something away, at least from this discussion. Super interesting. So thank you for coming on today, to you as our panelists, Matthew, Andreas, Cyrus, and Johannes. And with that being said, hope to see you soon again on another DIA panel, and enjoy your evenings.
Okay, great. Thank you.
Thanks a lot for the invitation.
Thank you for the invitation.